Welcome traders, my name is Adam Harris. I'm a chief market analyst and I am going to present to you my analysis for the week ahead. I'll be doing different asset classes, and one of the things I wanted to mention is that I am recording this on Sunday, where's the date? Sunday the 18th of February for the week commencing Monday the 19th of February. So essentially we have around about 10 trading days left in the month. It's been a relatively profitable month so far, and just having a look at the economic calendar. So the reason as a trader that I'm looking at this calendar is to highlight any news that might disrupt or ultimately generate or potentially even end any existing trends in the markets. I'm really going to focus on the UK for now. The reason is that the US is looking particularly strong. There's no real red flags that I feel the need to monitor or discuss at this time. Yes, if you want to pay attention to the FOMC meetings, this is 7 p.m. UK time. That's more if you just want to hear a confirmation as to what their timeline is for potential rate hikes or potentially rate cuts. Most people are expecting rate cuts, but it is there is a reality that we still have a lot of corporate greed, and therefore inflation is driven almost exclusively by corporations raising prices, and therefore we might need to see actually rate hikes in order to curb that. In fact, that is likely to be the trigger of the next market correction. Will be just simple people's budgets running out because corporations are charging too much. So this week I'm going to just focus on, it'll be first thing in the morning, really Thursday, out of the UK will be PMI data. And there's some jobless claims coming out of the US. We've got CPI data for the Eurozone. I also think that's worthwhile paying attention to. So last week, technically speaking, the UK has now entered a recession. Really, there's just very little growth happening at the moment. And one of the key differences between the UK and the US is that the US has so much more of its GDP coming from technology. Whereas in the UK, it's less than, I think it's in approximately 10% of the GDP comes from technology sector. So because we're now a technology-based society, and we have been obviously since the 80s and 90s, the UK is simply just not participating in the fastest growing sector. And that's part of the reason, simply lagging behind in terms of growth. Right, and then the only other thing to mention is Emperor Naruhito's birthday on Friday. So that is a national holiday for the Japanese yen, and obviously for Japanese markets. There we go. So that being said, let's go across and have a look at the markets. So the first one we're looking at here is the VIX. It is generally trending higher. You can see it was a tiny little bit of a spike this last week, and we've now moved into sort of positive territory here with the MACD, but you can see it ultimately closed lower. I do think it's interesting that we saw it spike a little bit higher. For context, looking at the monthly here, we didn't even really break the same kind of highs we did in November. So it's an early part of the year. We did have a little bit of a spike high, and that's just an interesting observation. Again, just to give you some context here, I don't really get concerned about volatility until we start to sort of breach above 25 and start getting into this orange zone. Really, that these areas we're still relatively speaking, the market is nice and neutral and calm. Don't forget that we've got one of the most, we have the most significant election in our modern lifetimes at any rate in November this year. So as we approach November, I want to see how the market responds in anticipation to that. It is very likely, and I'm calling it now, 18th of February, it is almost a certainty that Joe Biden will be re-elected. There's a long series of reasons for that, but it's almost a certainty. So despite what you hear in the media or the proper data, if you exclude the media and you look at the actual data, the data points to it being a record-breaking re-election for Joe Biden. Okay, so let's go to the dollar index and have a look at here. So the dollar index has been climbing. It's broken through some resistance, I beg your pardon, broken through some resistance, coming back in here to test it for support. So this is going to be an interesting one for me. When we look at it from a monthly perspective, you can see that it is in a range and is working its way up to the top of the range. So the momentum is more bullish than bearish. But it is interesting to me that we had this solid breakout and then prices almost immediately come back to that. So it isn't really a strong trend. It's just sort of slipping that way. And where it gets interesting to me at any rate is when I look at euro dollar. Euro dollar is now starting to look more and more bullish. So my expectation this week is to see euro dollar attempt to push higher, see if we can get past this 108 level. And if we can close above this, I think we're much more likely to see this continue higher. If you look at it from a weekly perspective, you can see how prices started to produce these bullish wicks and starting to close near these similar opening and closing prices. It really is trying to turn around, and if it does, we're going to see this head up a little bit higher. So the reason that's interesting is because that means we have both a strong euro and a strong dollar. Then ahead, let's just go and compare that to, say, cable. So cable is also starting to look a little bit stronger as well. You can see here it's producing a higher low. It's trying to creep back into that range. It just looks a little bit more bullish than bearish, and the weekly is a mess. There's just not a lot going on with cable, so I'd love to see that kind of decide which way it wants to go. Aussie dollar's also now starting to look a lot more bullish. You can see we've produced a low here, then another low, another little bit of a high low, and then another low, and then breaking up. So there's a lot that what's actually happening now. If you collectively look at these sort of 10 or 12 candles, you can see that it's actually trying to break higher. And certainly on the weekly here, you can see it is attempting to find supports that it can break higher. So looking at the euro, GBP, Aussie dollar against the US dollar, as well as Kiwi dollar, they are looking just that little bit more bullish than bearish. So interesting there, because we're seeing some signs of a stronger dollar, but also seeing signs of a weaker dollar against certain pairs. Dollar yen here, for example, is a relatively decent trend to the upside. This 150 level is significant for the Bank of Japan. And so there's a lot of pressure. There is some area, potential area for resistance over here, but the trend is to the upside. So when we look at dollar yen, we're seeing dollar strength, which is interesting. And if you don't think it's dollar strength there, look at dollar Swissy. So dollar Swissy is also trending higher, producing dollar strength. So we're seeing dollar strength against the Swiss franc, dollar strength against the Japanese yen. Let's quickly have a look at dollar CAD. Dollar CAD is still trending higher, technically speaking, high lows, high highs. So dollar strength there against the Canadian dollar. But then when we look at the euro, the pound, the Kiwi, and the Aussie, we're seeing dollar weakness. It's very unusual to get that kind of a contradiction. It's very unusual. Okay, so let's move on and let's have a look at gold. So gold is worthwhile keeping an eye on. When we look at it from a monthly perspective, it's actually finding support at this 2000 level, even though it is just above it right now. To me, this is one to watch this week. This is one to watch this week. I'm looking to see, I'm just going to put in a very gentle line, I'm looking to see if we ultimately start to break upwards through this downward sloping trend line. I think we could see, this could possibly, and we'll know more during the week, this could potentially be the turning point for gold to move to the upside there. So that is something that I think is worth keeping an eye on. And certainly I would say if we manage to get above 2032 above this kind of red moving average, as well as 50 moving average, I think the momentum then will confirm that we're starting to head a little bit higher. But here is one of the best charts I've seen so far that I will absolutely be participating in this week. And I didn't really look at it last week. I didn't appreciate it, so that's mea culpa. This is on silver. We have a bullish engulfing candle. We have a double bottom. All right, so this was a beautiful double bottom. We've broken above the previous highs. We've broken above these previous highs, and we have bullish divergence on the MACD. So all of these are incredibly bullish signals. My expectation for silver this week is certainly up to the next level here, around 24, potentially $24.25. That's where I expect it to be able to go to. I'll be looking for entries. If price can retrace at any point this week down towards the 23 mark, anywhere into this area, I will be looking for a bit of a bounce before it can go off. So basically looking for any kind of a move to the upside here. So that could provide for the day traders, that could provide some really high probability buying opportunities. So silver is really bullish, and it's very rare. It usually kind of operates in the shadows of gold. Then my expectation is that gold could also move to the upside. But let me be clear here. Silver is already moving to the upside. Gold has not yet done that. And so it's something that I would just rather watch and keep an eye on. So then quickly looking at copper. Copper is also looking very nice and bullish. So if you're into copper, then that is looking like that's going to have a good week. Then let's quickly run through some of the other commodities, looking at coffee. Coffee is not really going anywhere in general. It is just sitting above 180 and generally floating in about that area. You can see it's encountering a little bit of resistance around that 192 level. Nothing great about it. It is leaning a little bit more that way. Natural gas continues to come down to test these lows. We'll have to see what's going to happen. If it's going to find any kind of a support near these lows, we'll see if that's going to be the case. But for now, it just maintains that bearishness that it has actually had going all the way back to September 22. Crude oil, ladies and gentlemen, is looking very nice and bullish. We've been looking at it, attempting to break out here. I think we can get rid of this now. So that was a breakout move that we spoke about a while back. Again, you might be new and so joining the channel. So this is a weekly video where I analyze what my expectations are for the coming week in isolation as well. So this is beautiful. It does look really good. My expectation is that crude oil should be successful in breaking up through this level of resistance. That's really what I'm looking for. So that is West Texas. And let's just have a look at light crude. Just going back to that, light crude looking good, and West Texas also looking very nice and bullish. In fact, there was a very nice clean pullback here and a nice engulfing bullish candle, so that looking nice and bullish. So I think there's a good chance we might even see it head up towards 80, possibly $80.50 this week. Right, very quick look at wheat. Wheat continues to move lower. A little bit of bullish divergence that crept in, but we haven't really seen a change in direction just yet. So I'm looking to see if we'll get a bit of a bounce off this area to get a confirmation, but for now it just continues to remain bearish. Let's have a look at sugar. Sugar's had a really nice solid correction here on the monthly, a nice little retracement back down to a key level. So now what I'd be looking for, and I think it would be significant, is if at any time we break the high of of January. So we break the high at $23.99, call it $24. My expectation then is we'll see sugar start to climb back up. So that's one of the things we'll be looking for this week. And then let's move on to cotton. Cotton's looking nice and bullish. What's good about this is that it's been kind of stuck in a range going back again, similar to September 22. What happened in September 22? That a few commodities started to kind of move lower. Then at any rate, we can see it here starting to break above these previous highs, looking more bullish than bearish and actually moving quite a bit. So cotton starting to show a bit of activity there. Now we move on to the MVPs. We're looking into the global indices. We'll start off here with the Dow. The Dow overall looking nice and bullish. There's a little bit of bearish divergence creeping in. What does that mean? It usually means we're looking at either a bit of a consolidation or a correction. Now, the monthly you can see here is producing smaller and smaller candles. So if you look at the last 3 or 4 candles, you can see it getting smaller and smaller and smaller, because at some point we do expect it to have a bit of a correction. Now, I have to say that if we had a correction down towards 36,400, for me, that would be a beautiful buying opportunity. I'd definitely be looking for that. It would be a very nice, healthy correction. But if the market is really, really bullish, then the correction is more likely to be in the form of a tiny correction on the weekly, or potentially even a consolidation. So the consolidation here would move even slightly lower down towards 37.7. Then we could have a correction from that point. And actually, if you look at it from a weekly perspective, the last 3 weeks have operated largely in the same area. So it is already consolidating. The only question is, will it have a bit of a correction that will take it down towards that sort of 36,500, which is not that far away. It's down over here. We'll have to see if that's going to be the case. So I'm just expecting, the market in principle to me is bullish, but it is overdue for a little bit of a correction. It has to have a bit of give and take as it works its way up. And all those kinds of corrections become buying opportunities in a bull market. So let me slow down and say that again. All of the corrections, which we have to have every few months, all of those become buying opportunities in a bull market. Okay, and we are in a bull market, just in case I haven't already stated that. Look at the S&P here is having a killer run at the moment. So this is looking very good. A little bit of an attempt at a correction there. And otherwise, I don't think looking ridiculously overextended. If we have a look at it here on a monthly time frame, and you look at the most recent 4 candles and their relationship, their distance from the moving averages, and then you look at it previously, we can run for a very long time. It can run for a year or more without having any really big, serious correction. So I'm not too concerned about that. The weekly might want to do a bit of a consolidation, but it looks incredibly healthy at this point in time. So we might have a bit of a sideways. We could potentially have a bit of a sideways move this week, but that's all in favor of a correction. That would all contribute towards a correction, and then we would see a bit of a move continuing on from next week. So S&P looks really nice. The NASDAQ. Okay, so there was a bit of questioning as to whether that NASDAQ, we've had this beautiful move and a pullback and a continuation. I think we can get rid of this, and I think we can get rid of this. Here we've got just a potential lower high here, but that's not enough really. You can see it's the weekly that's worth noting. The weekly is hinting at especially a potential bit of a consolidation or a correction. And again, I stand by it. Any kind of a correction down towards the 17,000 level, for me, I would consider that a very good buying opportunity. What could happen is the early part of the week, we could see a move down, and then we could finish higher by the end of the week. So in other words, that would be a beautiful correction and a continuation setup. Right, let's go across to the mini Russell 2000. Also looks good. I really like the continuation over here. I've spoken in recent weeks about the likelihood of it breaking out to the upside. So this is interesting. Why? Well, because the Russell 2000 has been stuck in a range going back to June 2022, and it's very close to a breakout. We see some of the other charts are also looking like they're breaking new ground. So instead, if we could see potentially this week actually is that the markets continue higher and the Russell breaks out, and then we get a correction after that. So that's very interesting to me. The FTSE still looks bullish, and I still think this is a bullish engulfing candle, also is going to try and break out. So the markets here, the markets that have been going largely sideways, are hinting at a possible breakout. Will it be this week or next week? They are hinting at that, so that's very interesting to me. The DAX, let's have a look at that. DAX is beautiful. Look at this really nice consolidation and a break and a close above that level of resistance. So to me, that, and there was a setup. I missed it. Sorry, that was an inside bullish candle. Nice little pullback, consolidation, and a breakout. That was very good. So this week, the DAX for me is going to move higher. Any kind of a pullback for me would be buying opportunities, but it looks good. Well done, guys. DAX looking great. Let's look out of Australia. Let's look at the ASX. Beautiful. Beautiful. So it's already broken. This is what we would call a bull flag. I'm just going to draw it here so you can see it. We had a bit of a bull flag here, and it's already broken through that. So my expectation for now is that this is also going to continue high. That weekly candle, very nice little break and a retest. Bullish, not a super bullish close, but not terrible either. Looks good. So typically, if I see this kind of a setup, my expectation is that we'll see this continue higher, which means that if it can break past that 7,700, we've got 7,800 on the horizon, which is great. And then last one right here as well, look, is the Nikkei. Nikkei's had a really, really good run. Very happy here. Solid breakouts and a continuation up. That looks really good. Again, any kind of pullbacks here, retracements here, for me would be entry opportunities here. Looking good. There's no divergence anywhere. It is overextended. I mean, it's a little bit overextended on the monthly, a little bit on the weekly, and certainly on the daily, but not enough that at this time, not enough that I'm expecting any big corrections on the weekly. It would be a surprise if that was the case. Certainly here, I'd look for any kind of retracements, but that weekly is starting to get to a place. Potentially, it's going to hit 40,000. So let's just put in a little bit of area, see if we're going to reach that 40,000 before we have a bit of a correction. Wouldn't that be cool? Right, let's move on to the equities of interest. So we're looking at Apple. Apple appears to be forming a little bit of a head and shoulders here. So we've got the left shoulder, we've got the head, the right shoulder. Should we break through this, especially if we break this low, there is then, if that's the case, statistically, it's an 83% chance that it will then break down and come back down, and likely that distance, if I have to measure the distance from the top of the head towards, say, the neckline, and then just move it down, we're going to see Apple head back down towards 165. That would be a correction down towards these lows over here on the monthly. And again, for me, that would be a buying opportunity at this time. What is interesting to me, just randomly in my passing, I saw that Berkshire Hathaway, it did extricate itself from or remove or reduce some of its exposure to Apple. I find that interesting. And that could simply be why this happened. But for now, that's something I'll be having a look at. It's okay if it's range bound. That would mean that if it does fall this week, the target for that is going to be around the 164, maybe 160, maybe 160 at most. I wouldn't expect much. And then we'll be looking for recovery from that point. So stay tuned. I'll follow that up in the coming weeks if that's going to be the case. On the other hand, should this level hold, price comes up and breaks above this high, we're going to be fine. So then that head and shoulders won't play out. This looks great. So having a look, we're now looking at Amazon. Amazon's had a really decent run. It's effectively back up at all-time highs, 175, 180. A little bit of a retracement here could provide a nice last buying opportunity before it takes another run at the highs. AT&T having a little bit of a rough week, but that weekly chart looking really good. I'm going to get rid of this. We don't need this anymore. We're outside of that range. We look nice and bullish. We set up a bullish candle here. So it looks to me, what I look at it here, yes, it's had a bit of a bump with that 50-period moving average, but I expect it to continue up at this time. Let's have a look at that. That one's a little bit of a question mark, but we'll have a look. ARK Innovation. So ARK is another one that has, that was a green box that I drew in the expectation of seeing it start to look bullish, which it has, bullish engulfing candle from the previous week. It's trying to break out of this. That looks really good. So it's shifting slightly more bullish than bearish. I think we could actually finally see ARK Innovation starting to push a little bit higher. Now, ASML, who are semiconductors, the master sort of semiconductor manufacturers, they are looking fine. A little bit overextended. This is a good example of an overextended chart, but you can see here some good runs. We just sort of angular momentum is very bullish. It does need to have a correction. It's got a little bit of an inside. I'm going to call it a hanging man. It's not technically a hanging man. It's a bit of a hammer, but it's an inside candle, overextended. A break of these lows would usually trigger a bit of a correction. We do need to have that one, but otherwise it looks nice and bullish. So when I talk about us getting a correction in the context of a bull market, a healthy market, even in a healthy bull market, there is profit taking. People will take profit. And when we have that, we often have a bit of a correction, and then people get back in on the market. And those are the best things because they provide us, they're frustrating for investors because they watch their profits come down a bit, but then the profits go back up a bit as buyers re-enter the markets, either new buyers or the same buyers reacquiring positions. Glencore. So Glencore broke at the bottom here, and I wanted to see if we got back in. If, in other words, if it was a failed breakout, it's too soon to tell. I need to see if we're going to get back in on this. We're still within that area. We're still stuck in on that range, so I have to come back to that next week. We've got Tesco, which has had a really nice correction. When you look at it here, this is a beautiful retracement from a monthly perspective. It's in a really great place, even potentially a little bit lower, to produce a nice bullish candle. So this is one of those ones that you do want to keep an eye on, because if you start to break above these previous highs, we're going to start to turn around. And it's looking good on its correction so far. I still think there's the potential for it to go a little bit further. So I want to see if it comes down towards 265 or 260. But this all looks good to me within the bigger picture. You can see here we had 2 solid weeks before we had a third week, which even broke the low, but then finished bullishly and started the next move. So we could have a similar, that's what I want to see, if we're going to get a similar type of move this coming week. Amex looks good. All right, looks really, really nice. Started to break out, continue again. Also having a really nice run. One of the things I do want to mention at this time is the angle of momentum on a lot of these stocks is incredibly bullish. Like I think it's healthy bullish, but it's also, there's definitely a bit of, the expression would be a little bit of tequila in the punch bowl. There's this, if this is a party, it's getting hot, meaning just that the angle of it is not sustainable. If you look at the angle of price over here versus the angle over here, it's just a different type of angle. So at some point, the markets will go into a bit of a consolidation mode or a correction mode, and that will cool things down. Doesn't mean bear market. It's unlikely. It's unlikely that we will have another bear market. We've just come out of one. It's more likely that the next 3 to 5 years, we will see the bull market maintain itself. Some form of gray swan or black swan event would have to happen. Berkshire Hathaway. Beautiful. Looks great. Very nice and healthy. Beautiful again. Looking for any kind of corrections, any kind of pullbacks, but overall looking nice and healthy there. Coca-Cola wobbling a little bit within this larger range. You could see these wicks over here starting to come in, showing a bit of exhaustion. So we could see a little bit of a correction to the downside, but nothing to me that is of a concern. We have BP just trying to form this swing low over here, so we might see that push a little bit higher, which makes sense because crude oils are looking bullish, which means Exxon as well is starting to look nice and bullish. It's at the bottom here as well of its range, producing a swing low. So my expectation this coming week is both BP and Exxon and crude oils will all head higher. We've got General Motors also stuck within its range, so very similar to Cathie Wood's ARC. That was the innovation ETF. I want to see this week if we break out higher. Beautiful consolidation and a breakout here. I want to see if we can get out of that range this coming week. JP Morgan Chase, beautiful. It's going rock solid, nice and stable. Let's have a look at Adidas. Okay, so Adidas has sort of lost its momentum. It's been coming sideways, but here it's starting to try to push higher. The key thing here is that it has a higher, that collectively, these lows are higher than these previous lows, which maintains a type of bullishness. And I'll be looking to see if this breaks up and heads up a little bit higher. Meta. Meta has just consumed a lot of energy after the earnings report up here. And so it has a choice. It either has to have a bit of a correction before continuing or a consolidation. This is a beautiful example of a consolidation. Excuse me. But yeah. My expectation for now is that we'll potentially have a bit of a correction. We'll see consolidation first, and then we'll see what else happens with that. So for fun, let's bracket this price here into a little bit of a range. I'll move this back a bit just so we can, if it's going to consolidate, then we will see it stay above, probably above that 450 level. Let's see how that goes. Morgan Stanley. Morgan Stanley, really, really nice. Also looking nice and bullish. The question mark here is what was going to happen with it. I think it's looking more and more likely, ladies and gentlemen, that this is going to push to the upside of this. Overall, it's a bit messy here. It is stuck within a range on the monthly, but I expect it to go ultimately push to the upside. NVIDIA. Okay, so I've highlighted this because I'm looking to see if we run out of steam where we are. We've got a little bit of an indecision weekly candle here. So break of any of the lows of these would usually trigger a retracement, and we would see price come back down towards that 600 mark. So right now, last week didn't go anywhere, broke a little bit higher, closed in the same place. So let's keep an eye on this area. That's why I have highlighted that's why I've highlighted this. Okay, to get that, to just highlight it around this, because I think we're coming into that area soon where NVIDIA will have a bit of a correction. And this is also quite interesting. Netflix has done a nice break and a retest and a bullish engulfing bar, so it's going to attempt to continue straight up from here. It's going to try. We'll see. There's a little bit of resistance in this area when you look at it from a monthly perspective, but it looks good otherwise. PayPal. All right. PayPal on my list here is one of the ones that is just really, really struggling. I'm not sure what the solution is. I'm not qualified in that area, or at least don't have an opinion in this, but it is struggling a bit. And so for now, it looks as though it's going to stay in the same place or head lower, but is not really showing a lot of signs of moving higher. Spotify is catching up to the rest for now. So this is what we kind of call parabolic. When you look at it here, you can see that the angle over here is relatively steady, but it's getting steeper and steeper and steeper over here. A lot of the market is doing that. So there's definitely a lot of greed in the markets at the moment, metaphorically speaking, just saying that the market is very hungry and it's going to ultimately encounter some resistance up here, but otherwise it looks fine. Spider looking good. So this is another one that looks like it's imminently about to break out. Okay, so this is the ETF, looks very close to breaking out. So this week we've got something like 4 or 5 or 6 charts that look like they are just on that edge of breaking out of a range. And it doesn't count until they break out, but that could imply that this week, if they're not going to break out the range, it could imply we actually have a bad week and the markets come back into the range, or we have a really good week and they break out. But it is implying something is going to happen this week, so that's interesting to me. FedEx, just having a normal retracement down here. It really did fail over here. It's trying. I think we'll potentially see it come back down towards these highs and test for support in this area. What I would mention is it's just starting to dip below that 50-period moving average, so it's starting to lean a little bit more bearish than bullish. But it has that last... The thing that takes preference over everything else is price. Okay, price comes first, which means horizontal levels are really the most important levels that you can have on a chart because they're price-based. And so that is the last end. The fact that we're just below that 50-period moving average is nice, but it doesn't count until the support level gives way, if that means we're going to be more bearish. Tesla. So Tesla has moved higher this last week. We spoke about that last week. It's overextended, produced a very nice bullish close near the high. My expectation is it's really going to try to move up to that 211 level, at least back in towards these highs here, 210, 212 area. But that I've done some separate analysis on this, but that doesn't really tell us much more about that. There is a very unclear medium long-term picture about Tesla at this time from a technical perspective. It only starts to look bullish if we can break above these levels here, that sort of 240 level. Once you break above 265, it becomes very bullish, both medium term and potentially longer term. In fact, I won't even do longer term here, but medium term it certainly becomes bullish, shorter term and medium term. And if it does fail, once it fails in this area and then heads back down, if it breaks down before it breaks up, that then shorter term and medium term implies not good. So right now we're sitting between the two, waiting for it to decide which way it's going to go. All I was going to say is that at least for the shorter term between this week and next, I expect it to attempt to close this gap, move a little bit higher. Then the question is, does it produce a bearish candle? So should we get to this area here and produce, for example, a bearish rejection candle in this area, let's just move this across, get a very bearish candle in this area, and we break the low, that would then, or even a bearish candle, especially the shape of it when it comes, or if it comes, would imply that we're going to see a continuation back down to the lows. On the other hand, should we break up through here with a nice solid green candle, probably very nice and bullish, then it starts to add a little bit more bullishness to that. Vanguard, looking really good. So same as the S&P, looking really good. Looks like that's going to continue. Walt Disney, also beautiful, really, really solid. This was just such a nice little buying opportunity over here. It looks good. It's come to the top of the range. My expectation for now is it's going to keep going until it encounters that 50-period moving average, and then it's going to have a bit of a battle, and then we'll have to see what happens. But for now, Disney could actually turn out to be one of the nicest opportunities in recent months because it was right down at the lows. It had given back almost 50% of its growth, and it looks like it's now on its way back up to the high. So that looks pretty good so far. Let's have a quick look at bonds. So looking at the US 10-year T-notes, they're still looking nice and bearish. When I say nice and bearish, I just mean for traders, not obviously for holders of those, but that looks nice and bearish. That's a bearish engulfing candle, and it's a pullback into a level of resistance. So usually in a situation like this, my expectation is it's going to go back down to those lows. Let's see if that is the case. Euro Bunt was looking, relatively speaking, was looking more bullish. It's now still looking bearish. So I expect this to potentially continue back down towards those lows. This is important because this shows us that the appetite is still leaning towards equities and not towards bonds. That actually shows the general bullishness of the nature that the markets are not really interested in buying bonds. They'll sell them rather than buy them, and they'd rather put their money into equities. Okay, so let's have another look. Let's go into Bitcoin. So let's look at cryptos. Cryptos are doing really well at the moment. They really are. My expectation here is we're going to see this continue to climb to the upside there. So Bitcoin is certainly got 60,000 in its sights, which is really cool. Ethereum also looking good. I've no doubt that Ethereum will continue to push a little bit higher. It's a little bit of a lagger, so the laggers could turn out to be the bigger money makers just because of that. Here, for example, is a buying opportunity on this, technically speaking, on the daily for Solana. So Solana's pulled back. It's got to get out of this, but that looks pretty good. There's a nice little weekly setup. That's a nice little daily setup. That looks good. We've got Cardano starting to break and go to the upside. What's beautiful about this is significant. It just couldn't get past here, just unable to do it. Now it has actually managed to close above that side. So that's good. So this week I'd look to see if we are going to test this level and continue up. We're not really free until we get past these levels, but that's a great start. That's the kind of thing you want to see that tells you it's doing well. And we got Binance, which is broken out to the upside here. So consolidation and a breakout looks really good, guys. So crypto's on fire. I expect them to continue this week. They look really, really good. So there we go. I think we can actually wrap that up where we are. There's definitely hints of bullishness potentially in that. We're getting mixed signals from currencies with regards to what's going to happen with the US dollar. We're seeing realistic dollar strength and dollar weakness. Silver is definitely, for me, going to be higher on my watch list. Crude oil is looking nice and bullish. So silver and crude oil for me offering some really good opportunities. Yes, the indices look nice and bullish. If we have a bit of a correction, that's fine, but they still look good. Looking at individual stocks, a lot of them are coming to the top of a range where they could actually break out this week. As I said, it only counts when they break out of the range. If they fail, they could just go back into the range. So if we have some unexpected bad news this week, they'll stay in the range. But a lot of them are hinting at that breaking out. And so that looks really good. Bonds, not really getting much love. And then, of course, cryptos are getting plenty of love. So they certainly appear to be on their way back up. So from me, Adam Harris, Chief Market Analyst, I want to wish you a fantastic week. Stay on your toes. Keep an eye out. For the most part, the markets are looking pretty good. Plenty of opportunities all around. So there we go. Thank you.